Hello guys, welcome back to my channel. So this is Leslie Light, guys. I'm back again with another boom and crash strategy. So it's been a while since I posted on this channel. So it's been over 5 months, over 6 months. I've been having some issues with all the trading stuff, so I don't want to talk about some things like what happened. So we're just gonna get right straight into the video and focus on what we do the most. Okay, so the only thing that we need to focus on right now, we got a spike detector right displaying on our screen, but we are not just trading the spike detector blindly. We want to use something extra on this one. So what we need to do, we just quickly need to go to your M5 time frame. So on my M5 time frame, I've got the parabolic SAR. So the parabolic SAR is acting as my trend filter. So this is how you can use it first, or you can actually use it with the next strategy that I'm going to show you. So let's do this. So you want to go to your object, you want to create the trend line. So what you need to do is you just come here and put your trend line here, so you know that the market is trending down, and then that's when you can come to your M1 time frame. So when you come to your M1 time frame, you follow the line. So this is where it all began. So market cross below the parabolic SAR in M5, then every indicator that pops up on M1 time frame, you're going to take the trade. Okay, so when you take your trade, this is one is a sell position here. So normally when it crosses below, the first signal you get, hold the signal. You hold the signal until it crosses above again. Okay, so what you need to do is to open your position here to hold the market. So however, if it goes down, you can actually still open positions because you have so many spiking potentials coming on. So you get so many spikes going on. So this is another spike. So these are all the spikes that are happening as the market is trending down. These are all the spikes that are happening, as you can see up to this point. Okay, so what we need to do, you want to go back again to your M5. Okay, once you go to your M5, so let's go and find another position where market was actually trending below. Okay, so we just take our trend line here, we just put it like that. Okay, up to this point. So this is using the M5. Okay, so here you get the first signal, you hold on this signal, you sell as market goes down, keep on selling, sell until the market crosses above. So when the market crosses above here, this could be your SL, or you want to hold a few candles above once it crossed. But it all depends with your risk management. Okay, it all depends with your risk management. So once you see it like that, you want to go back again to your M5. So we are looking for the trends. Okay, so let's go and see where else. So in other cases, market will be just chopping. Okay, so here you got it again. All right, I don't know what was this one. It's just, so here you got it again up to this point. Okay, this was just a small trend. So let's see what it was in M1. So in M1 time frame, as you can see, if we want to zoom it out a little bit, as you can see, in M1 time frame, market here spiked down. You got this one long stretch, and this was supposed to be in loss, and then you get some spikes here being caught all the way down here. So you get all the spike here, and then you get into loss before it reaches your SL. So if you want to come back again on M5, so you're using M5 as a trend filter. So this is so here there is another one here. Okay, there is another one here. So let's go to M1 and see where we are. So here you're looking in this sector. So these are small spike. This one ended up being in some profits after a long time. You got the spike here, and then you got the long stretch. So once you got the long stretch, this was a SL hit, I know that, and then this one, all these ones are in profits, all this one are in profit. This was a long stretch and this was a long stretch, so you get 3 losses, a lot of wins. Okay, so this is how you can use it, using what it looks like we ran out of data here, when you're using the M5 is a trend filter. So there is another option, however, what you can use. So what you can use again is, you can come to M1 like this one. You want to click on indicators. When you click on indicators, the parabolics are, once you open it, you say all time frames. So when you say all time frame, the parabolic size is shown in all time frames. So what you need to do is just zoom in a little bit, just like that. So the thing is, now we are focusing on when the market is under the parabolic SAR, and then we are given a what? We are given an indicator. So let's go. So we can actually let's focus on ES first. Okay, so market was trending up. Okay, once market get to this point, what you can see right now is market started to, so market spiked down up to this point. All right, when market spiked down to this point, it crosses the parabolic SAR. Once it crosses the parabolic SAR, this one was painting up. So you got the signal here. So what did we say? If you get the first signal when market was trending all the way up, you can actually hold here. So you hold your entries from this point. This spike came, then market still on the point here. Okay, you can actually take all these trades because market was still trending under. This one it was right on the spot, right when market was breaking out. It was actually the resistance zone, so you still get a signal. So when you enter the signal, it all depends if you want to close it there and there, or if you have another tolerance that you can give for the market once it broke up the parabolic SAR. So if you have a tolerance of 9 to 10 candles, so which means you still be in profit, but if you close instantly, you'll be not in profit. So another opportunity, still images. So once the market broke out here, you still got the signal, and when you enter the signal, like what we said, hold the signal. You hold the signal, you got the profit, and still you got another profit coming on. Still, these are all the profits. So now it depends again. If you broke out, if you want to close there and there, you can. But if you want to hold a little bit, you'll be still in profit, still in massive profit here. Again, a small breakout, market cap broke down again and come back in the zone. Still here, you enter. All of these are profits. Okay, so this was actually a demo trend where I entered when market was actually showing me like the Spike Detector popping up. So I just entered here, and as you can see, the market is still trending under the parabolic SAR. So the parabolic SAR is acting as a trend filter. So the difference between the parabolic SAR on the M1 time frame is that you can still have small losses. Okay, and I think you get tight risk management here, because what you can see is when you enter here, right, market comes here, it's all about less than 10 candles, and it reaches the parabolic SAR. You can decide to hold, or you can decide to close. Okay, so most of the traders, they say SL $3. Okay, this $3 was not reached on this point. $3 was not yet reached on this point, so it's still being profit. So in M5, you want to come back to M5 and see the difference. The difference now in M5 is if you entered, let's say where I entered here, and market still trying to come back and reach the parabolic SAR, probably the odds will be the intersection will be probably around this spot. Okay, the intersection will probably be around this spot. Okay, let's get it down a bit, just to be reasonable. You may be just about this spot. Okay, but this gap here is quite large gap, so I'll be experiencing some high losses. Okay, but when you're using the trend filter in a M1 time frame, which means you have an opportunity to close early, so that you will not be in a massive profit, in your massive losses. Okay, so this is, and then the other thing is you can enter early, right? you can actually execute your trades very early if you use M1 time frame. Because let's take for an instant, market broke up here. I mean, let's go wait first did this one. So here, so if you want to say from this point, market actually broke down here in M1, and then you get the early signal, okay? But if you are to mark this point, if you want to compare with the M5 time frame, you can actually see that in M1 you have high chances of entering the trend very early. You can catch early entries, okay? Whereas in M5 you'll be entering around this spot. So the confirmation of M1 is quite early than the confirmation of what? Of M5. So if you want to come back to M1 and see where the point we marked is, so you can definitely see like there's a big distance in here from this point up to this point. So M1, I favor M1. So let's back test the M1. So every time you see the market trending below the parabolic SAR, you need to check your sell. So markets trending below the parabolic SAR. So this one are the correction ones, the correction moves where market actually retraces a little bit back. So market again spikes down, you get the signal here. Market hit the SL here, get the signal. Market hit the SL. These are not the trend. This is just the retracements. But when you get something like a trend from this point, you can actually see this one was a very good move, very beneficial. So for those of you who are looking to trade for the spike, this was your entry, and after this entry, you get all this spike up to this point. Okay, you get all the spikes up to that point. So that's the only way you can see, like, using the spike detector alone, you can have some spikes, but you need to trade with a strategy. So this will be now a very good strategy that you use, because you don't just want to random trade. Okay, this is the professional trading. Okay, in trading, if you don't trade it professionally, you end up losing a lot of money in this trade. Okay, so this is about it. And then if you want to look again, let's get the trend line out so that we can demonstrate with it. So again, if you want to look at this point, market broke down from the parabolic and it's trending under the parabolic. You get the signal, you get the spike here. The spike did not get into the profit. The spike came right when market is breaking out, so you wouldn't be able to hold this one for long. Okay, so here again, these are all the retracement. As you can see, these are not the important trades, as you can see that, but still you still get 2-3 spikes in a row, and you got a little bit of loss, but still you be able to have 2 profits and 1 loss. Okay, that's how it works. All right, so market was trending up. That's why you see a small spikes. That's why we don't want to trade when market is above the parabolic SAR, or when market is pushing up, or when market is on a breakout. All right, so as you can see, you still got the spikes when market is under, but market is still pushing up. Okay, so here, this range, market was actually, or this one, it was a ranging market. So you don't normally want to use this strategy in a ranging market, because market is not going anywhere. All right, this was all the range. Okay, so here market is just a stream of spikes. All right, no trend, no trade here. So if you want to use this strategy, you need to know that you don't just enter for the sake of entering. All right, so every time market is trending below, you get the money. All right, so here small spikes. So here market is trending below. Yes, you still got some spike. Here this was a correction move. Here this was 2 losses after all these wins. Okay, here again market is trading under the parabolic. You get all the spikes here, and then this one was a loss, and then market was pushing up there. So when market is pushing up, you don't get that good trades, but when market is under the parabolic SI, you get the good trades. So this is how this indicator strategy works for catching boom and crash on the market. So you don't want to lose money, okay? You don't want to lose money. You don't want to lose money, guys. So thank you for watching, guys. Thank you for watching. Was all about this strategy. So it's a parabolic SAR in combination with the Spike Detector. Parabolic SAR is your trend filter. The Spike Detector showing you some entries, okay? Showing you some entries. So it is user friendly. As you can see, you don't get to lose so much money in the market. It all depends with your lot size, with how many positions you entered, and with your risk management, okay? Risk management mostly. So if you're just trading to make money, you need to use this strategy. But if you're trading for the sake of trading, don't use this strategy, guys. This is for people who want to make something better in the market. So if you want to trade when market is trending upwards, like what I said, you don't need to be worried. You just need to use your upper trend line when market is trending above the parabolic SAR. So first thing first, when market broke out of the parabolic SAR, you need to wait for at least you need to wait for at least 2 points to be created, okay? So you get 1 point and you get the second point here. So what you need to do for those 2 points, those 2 points will guide you for the rest of the market structure, as you can see, like that. So you enter like that, market hits here. When it comes back, you take a trade. When it comes back, you take a trade. As you can see, market retain at that position. That's how you can use it. But sometimes market keep on pushing up, and up, okay? So it looks like we got a trend confirmation on this crash 500. It just crashed. It was just a small and then crashed. You see, it's a small reaction and then it crashed. So this is how you use this strategy, guys. This is how you can actually make money in the market. If you want to give clean trades, you can actually try and use this strategy. Be patient for the trend to be formed, and then you can start trading your spike in peace, okay? Thank you for watching, guys. Just like the video, and if you are not a subscriber, just subscribe to my channel. So this strategy is actually going for free, guys. So don't worry about stressing about paying and stuff like that. This strategy is going out for free. It's just a simple strategy that a trader can use to make money. All right. Thank you for supporting, guys. Thank you for supporting. Much love.